Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for the dollar yen, so the US dollar versus the Japanese yen. I've got the weekly chart pulled up here. The date is February 9th, 2020. If you want to stay up to date with all of our dollar yen videos, make sure you subscribe by clicking that red button in the bottom right hand side of your screen. Okay, so I've got the pivot points pulled up. My sentiment for dollar yen this week is bullish. US dollar just whipped right around and is making some big gains, very strong right now. We see that happening across all the majors. So let's dive in and look at dollar yen. As you can see, we've got this, it's a multi-year bullish formation. This was like a bullish ascending wedge where price pops above, then below. Right now, price is moving above this support line. We've got our overall big trend line down here, right? We've got multiple touches on this trend line here, each low being higher, so that's our uptrend confirmation. Now, this is the deep pullback line, but as price moves away from support, what we'd like to see, and I'd like to see to really approve that bullish formation, is price, keep moving away. Let's go ahead and draw this parallel channel. What you'll find is that once you have a trend line, you'll find a parallel in a smaller time frame. And that can help you know if your current buy is good. So if we do this parallel, see how here we've got touch, 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 price move back below it, touch. Now price is riding on top of it. We've got a big bullish candle last week. It didn't quite eclipse this most recent high, so we do have a bit of a price wedge happening. If we go ahead and look at this upper trend line, price still does need to break out of this pyramid, this triangle here. However, this is the small trend, right? It's multi-year, but it's the smaller of the two trends of this multi-year uptrend here. If we apply our moving average, our fast moving average, just that alone, let's go for the 20. So our 20-week moving average, we see price now moving above. Last week, a real big bullish push off. Each time it's happened historically, we've seen some nice gains, right? Happen back here, happen back here. So if price breaks above this 109.74, so we've got R1 at 110.43. Let's go ahead and draw our line for that. It didn't stick. Okay, come on, let's try that one more time. 110.43. There we go. So as you can see, price is broke. It's kind of stuck in this band. If we get a pop above, it says 111.03 is the next one. So that's where you see that descending trend line really coming into play as extra resistance, because those resistance lines are pretty close to each other. Look at that. This has that weekly R1 and R2. If price pops through that, then we'll think about 12.81, right? So price would really kind of take off if it can break through this horizontal resistance and this descending trend line. It just comes back from 2015, so it's fairly significant, but not as powerful as the uptrend from 2012. Let's go ahead and look at our daily. Let's reframe this. Okay, this is our daily chart. We see price moving above this channel. So you can do this a couple ways. This is a bit of a bearish daily on Friday, but still above the moving average. We might see a return to 108.50. That's totally possible, right? Back to this line, but then it would still be a bull. But as long as price is moving above that average, I feel pretty good about a buy. Now, we do have price sitting on the fast-moving average in the 4-hour. So that kind of supports the case that we might see a little bit of return to the 108 line. However, if price give it a couple, wait a couple 4-hour candles. If you see price maintaining above that 20 fast, it might be a buy, at least to R1 at the 110.44 area. That's about 70, 80 pips. So let's see. Let's go 1 hour. So here's our 1 hour. If you just wanted to day trade, for example, and play the 1 hour, you would do it like this. Right, so you just go off this recent bull trend, identify the trend line. That's pretty strong. I feel pretty good about getting in on that buy. Right, so because what I can do at this point is I can buy in, and then I can put my stop below 109.50. So that's not too bad. I lose, it's a loss of 20 something pips. That's a pretty decent entry point. And then I set my goal for weekly R1 at that 110.40. So it's about, when you think about profit loss ratio, that's a potential gain of 70, potential loss of 20, which is a good buy. So anyways, yeah, dollar yen bullish. Look for some resistance ahead in the 110, 111 range. But if we see price go through there, it should pop off. All right, everyone have a great week trading. Make sure you catch all of our other Forex videos for the week. Have a good one.